This is Shelley Craft coming to you live on SNN Live. We're at the Sprott Natural Resource Symposium 2016 here in Vancouver. I have with me Nick Hodge from the Outsider Club. He's a newsletter writer, and he also writes for the MicroCap Review magazine. Nick, the new father. Nick, welcome back to SNN Live.
Shelley, thanks a lot for having me back on.
So how does it feel to be a new father?
That's really good. You know, all the cliches that everybody told me are 100% true, so she's stolen my heart already, and probably a few of my dollars going forward.
So I wanted to speak with you about the resource market. It's been decimated over the last 4 to 6 years. It seems to be showing life. Maybe it's early in the hockey stick. What's your opinion? What's your take on the matter?
Well, it's very, very early in any sort of recovery. I mean, we had a market that got drilled down some 80 to 90% across the commodity board, really, as you said, gold, silver, uranium, base metals. And the recovery really now is only just starting. So we've seen since the beginning of the year, resource stocks, precious metals in particular, gap up 200-300%, and people saying, is it over? Was that it? Well, no, it wasn't it. Don't go chasing these stocks higher, these sectors higher, but certainly be buying on pullbacks. I think it's very early in this resource recovery.
So now that it's started to go up, even though it's early, why would it pull back?
Well, a couple of reasons, right? Trees don't grow to the sky, first of all. There's going to be some profit taking along the way. We've seen people lose so much of their capital over the past couple of years that a 100 to 200 to 300% profit like we've seen so far this year is nothing to sneeze at. And so if you want to take some of your money off the table, I encourage you to do that. That's one of the reasons that stocks could pull back a little bit and commodities themselves. Another reason is more conspiratorial. We have, central bank manipulation, the debasement of currencies, all these things that go on behind the scenes. We've seen people convicted of now rigging LIBOR, the things that HSBC has been doing behind the scenes. So there's some nefarious things in the background that sort of whack down the resource sector anytime it crops up to try to keep the masses in equities, I believe.
I might pick a fight with you on this, because usually when a sector's been down as long as it's been down, and you go in, and if you're selective, now, look, obviously if you're not selective, you have to watch out. But if you are selective, why wouldn't you continue to buy something that has so much promise? Why wouldn't you want to cost average up your position, then take a profit too early? When it's hard to be selective, it's hard to find good stocks.
Well, I'd like to think I was contrarian enough to be buying them over the past year is one of the reasons. And so I put my subscribers in a position to have banked some pretty decent gains so far, just in this early part of the recovery. Another reason is that it's psychological, right? We're coming out of a 5-year trough, a 6-year trough. It's, we're not ready to, I don't think, gap straight up or hockey stick, as you said earlier. It's going to be fits and starts, right? I don't think people are quite convinced that it's going to be an all-out rally just yet, but I do agree with you that once it goes, it's really going to go.
So now you have a choice. You can do gold, silver, platinum, or uranium, lithium. So which ones do you think on a scale that we will see appreciate in value, where would you go?
Well, the answer is yes. I go to all of them. But what I've been taught from some mentors of mine over the years is that you have to be highly selective in the equities that you choose in the sector. So when the lithium sector turns, when the uranium sector turns, when the gold sector turns, of course the rising tide is going to lift all the stock boats that are in that sector. But if you're highly selective, my stock's going to go up 600%. Your stock's going to go up 400%. I'd like to stick with mine.
I would take a 4-bagger, you know what I mean? But in reality, when you're picking your stocks, what in your mind makes that selection the one that's going to go up 600% as opposed to 400%?
Well, it's a couple of things you have to check off on your due diligence checklist, right? If you've witnessed the market over the past couple of years, we've seen management issue a lot of shares to get through the downturn. And so one of the things you have to look at first is share structure. Are there so many shares out that it's not going to be able to run? Look at the management. Are they good stewards of your capital? Have they kept the share structure tight? And then, of course, look at the asset. Is it in a good jurisdiction? What are the grades like? What are the costs going to be like? Can it actually be a mine? I want to buy things that are going to be mines, that are going to get resources out of the ground.
Now, that's the positive. What's that 1 or 2 negatives that immediately turn you off to a stock?
Well, share structure is definitely one of them, as I mentioned. If I'm looking at a U.S. or Canadian company that has a share structure like an Australian company where there's 500 million, a billion shares out, I'm not looking for a half a penny gain or a penny gain. That's really one of the first things that turns me off. Another thing is if management hasn't done what they're saying they're going to do before. So, if you're looking at a gold silver asset in Mexico, make sure that the management has dealt with gold silver assets in Mexico before and not some other asset in some other jurisdiction, because it really matters when it comes to permitting and dealing with the local communities.
You're in the market a long time, even though you're a young man. We're going into an election year. What can we expect the market to do in general? Because you're a generalist as well. What's your thinking on that?
Oh, I think it's going to be highly volatile. I think people are going to start lightening up their load on equities. I think we've seen a run since 2008, 2009 with fed by quantitative easing that have seen the S&P up several 100%, the fastest it's ever risen, really. And so I would just look for volatility. So I'm not calling for a crash. I think that the U.S. is going to be the tallest midget in the room still when you have $13 trillion worldwide of negative yielding capital. So I think that money is first going to flow to safety, and the U.S. is still viewed as a relative safe haven in those terms. Equities I'm talking about, mainstream equities. And then beyond that, I think you're going to see rises in the precious metals as people seek them out as the general safe haven that they have been over thousands of years.
So that's a further lift.
I believe so.
So now interest rates. What do you expect?
I don't expect much.
You expect higher rates?
No.
Stay the same?
I think you might see a raise in December. I don't think they'll do it before the election. There's enough going on in the world right now that the Fed won't throw an interest rate hike out before November.
Good point, not to use a pun. So in terms of what you're doing lately, what's going on with you?
Well, I've been, publishing my newsletter, Early Advantage. That's my flagship. I've been publishing it since 2007. It comes out every Thursday without fail. I wrote it from the hospital, in fact, when my child was born. And I've launched a newsletter specifically for this resource commodity space turnaround. It's called Resource Stock Digest Premium. It's run by a fellow named Gerardo Del Real, who has done research and guided in the past some billionaire clients. Specifically in resources, so base metals, gold, silver, and even a little bit of uranium. It's called Resource Stock Digest Premium, and I think his first 6 picks are up double digits since May, so he's doing really well.
Now, to find out information on everything you're doing, what's the best website to send our audience to?
All you have to do is go to outsiderclub.com.
Ladies and gentlemen, Nick Hodge, outsiderclub.com. It's a newsletter. He also writes for the MicroCap Review magazine. I'm Shelley Kraft. This is SNN Live. We're at the Sprott Natural Resource Symposium 2016 right here in Vancouver. Nick, a pleasure.
Always.
Give a kiss to the baby. Say hello to your wife. I'll talk to you soon.
Will do. Thanks a lot, Shelley.
You got it, bud.